Today, Bitcoin sinks to $40,000 as the post-ETF rout continues. We give you an inside look at how much crypto was a focus at the World Economic Forum in Davos, and executives from Galaxy Digital and Invesco discuss their joint SPOT ETF partnership and what's next for crypto now that these products are trading in the US. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices in the red to end the week. As of noon Eastern, Bitcoin dropped to the $40,000 level for the first time since mid-December. Ether fell more than 2%, hovering around $2,400, and Solana sank more than 7.5%. The moves lower in digital assets weighed on crypto-related stocks like Coinbase and MicroStrategy, which, as of noon Eastern, both dropped more than 4%. The Bitcoin miners were also all in the red, with Marathon sinking nearly 9% and Riot and CleanSpark both falling more than 6%. For the week, Bitcoin tumbled nearly 8%, Ether fell nearly 6%, and Solana fell nearly 7%. All right, let's talk about the latest headlines. Coinbase could feel the impact of more investors dabbling in SPOT Bitcoin ETFs. According to Reuters, which cited analysts, the crypto exchange could take a hit to its trading volume and margin, and Coinbase's trading commissions and spreads could also be affected as well. JP Morgan warned that if SPOT Bitcoin ETFs succeed, it will push potential Coinbase customers into the hands of equity brokers. On top of that, new investors could be attracted to lower than average fees charged by ETF issuers and the convenience of getting exposure to Bitcoin through regulated stock exchanges. CFRA research downgraded Coinbase to sell from hold, saying the company could be forced to cut its trading fees to stay competitive with those new ETFs. We reached out to Coinbase for comment but didn't hear back right away. However, a spokesperson told Reuters that at the moment the firm doesn't plan to lower transaction fees and expects to benefit from a broader adoption of Bitcoin. Since the new ETFs became available in the US stock markets last Thursday, shares of Coinbase have dropped more than 21% compared to the nearly 12% slide in Bitcoin. Next, the World Economic Forum is wrapping up in Davos, Switzerland, and Crypto World's Mackenzie Sagalos is on the ground to walk us through just how much crypto was on the minds of the world's business and political leaders.
I'm here on the ground in Davos, where world leaders and CEOs from the biggest funds and companies on the planet are gathered to talk geopolitics, business, and especially tech. Last year at Davos, the crypto discussion dominated panels at the World Economic Forum. But this year, AI took over. Up and down the main street here, which is called the Promenade, companies and countries were advertising their AI tech. But Bitcoin and the recently launched SPOT ETFs in the US were another major talker on CNBC's air. JP Morgan CEO Jamie Dimon remains a critic, but others like BlackRock's Larry Fink are all in. And there's certainly a lot of enthusiasm around Wall Street jumping into the sector. In fact, for the $30 trillion advised wealth management industry, the floodgates could be about to open. Analysts at Standard Chartered anticipate fund inflows in the range of $50 billion to $100 billion in 2024. Now, the World Economic Forum may be wrapping up, but you can catch much more of my coverage on everything from crypto to AI over at CNBC.com.
All right, back to SPOT ETFs for our main story. Yesterday, I spoke with Steve Kurz of Galaxy Digital and Kathy Kriske of Invesco about their joint ETF partnership, how it's going, and what to expect for crypto now that those ETFs are live. Kathy, I want to start with you. Invesco and Galaxy's BTCO is among nearly a dozen SPOT Bitcoin products up for trading in the US right now. We are speaking exactly 1 week after the ETF launched, and I'm curious to know how you think it's going so far, what has adoption looked like, and sort of what sets BTCO apart.
Well, thank you so much for that question, Jordan, because we believe our partnership sets us apart. So Invesco could have done this by ourselves, right? Galaxy could have done this by themselves. We chose to partner. So we're a leader in ETFs, right? We've been doing ETFs for 15 years. We have $500 billion in assets. And this is a differentiator. We focus on innovation. Galaxy, and I'll let Steve talk about their strengths, but they are the digital native with 5.3 in assets under management, super creative, that really focus on education. And we knew that we are better together. And we believe that no one else is offering this. And we can talk through some of the advantages we have, but the launch was very exciting. Obviously, historic event. And the BTCO, we believe, is a differentiated product. Not all ETFs are the same, and there are many differentiations, and we're going to talk through them. But one of the ones I wanted to highlight is just tracking error. right? When people want to buy a Bitcoin ETF, they want Bitcoin exposure. They want that price that they see on the screen for Bitcoin. And it is very concerning about some of our competitors and the operational structures that they have in place that really will limit them being able to get this sort of as close to the Bitcoin price as possible. They will have a lot of tracking error. And Steve, I know Steve can talk to you about what happened in Canada with one of their ETFs there. But the fact that the SEC chose for this to be cash creates alone and not in kind was a major hurdle for a lot of our competitors. There was almost panic amongst our competitors. For us, we've got this. Invesco has done Bitcoin, SPOT Bitcoin ETFs in Europe, and then Galaxy has done them abroad in Canada, in Brazil, in Germany. And so we had the operational advantage right out of the gate. And that was very pivotal for us. And when you look as an investor at this huge swath of counterparties and how do you choose who to go with? And a lot of focus is on fees. And we were the first ones to come out with the waiving the fee. So, but now a lot of our peers are at that same fee waiver down to zero, but it's not just about the management fee. Right? We talk about like the total cost of this. And so you need to consider the bid offer spread, this tracking error, like all of these factors where our combination of Invesco and Galaxy make us, we would argue, the best competitor amongst our peers.
Yeah, Steve, I want you to talk about that advantage. I mean, Galaxy, as mentioned, has plenty of experience with the Cash Create ETF in Canada. You have experience in Brazil and Europe as well. Talk a little bit about how that experience prepared you to enter the U.S. market and why you're entering the U.S. market right now as crowded as it has become.
Yeah, sure. And I would echo a lot of what Kathy said. I mean, this was an easy decision for us. One thing that's consistent with how we've approached all of this is the partnership approach. I think a crypto native is great at accessing Bitcoin. A crypto native is great at trading Bitcoin. We traded more crypto than any asset manager in crypto globally last year, $3.5 billion of crypto for a variety of reasons. We've got a whole platform that's not just the ETF side of our business, but active funds, liquidations of bankruptcies, et cetera. So we really do have that market texture and connectivity to the market. I think we've learned a lot in Canada. Canada is a cash create market. And when you look at the workflows that we've been able to map over many years and through many crypto cycles, what ends up happening is you figure out how to source Bitcoin very efficiently, whether it's going up or whether it's going down, whether other people are in the market for Bitcoin at the same time. And you really build trust and familiarity with those underlying liquidity providers. And so when we say, Canada as an analog, it's very directly analogous in the cash create side. And we were able to outperform our competitor by 1,000 basis points last year, so 10%. And so I don't want to diminish from the fee conversation. It's important. It's relevant. We will be aggressive on fees. We already have been. We were the first ones to do the 0% waiver. But I just want to highlight that the most important thing for investors is who's going to be here to stay in the long run, who's going to help you contextualize this in the portfolio, who's going to track Bitcoin the best, and then, of course, fees and all the other things that matter. So I think you have to look at it holistically, and you really have to look at it over time as opposed to any one moment or any one day out of the gates.
Kathy, something that's come up already several times is the race to lower fees, this increased competition. What are your thoughts on consolidation? We have a dozen of these. Is this something that you expect by the end of 2024, heading into 2025, that will still be the case?
Really, we do believe there will be consolidation, but it's going to take time. I feel that almost every one of our peers in this space will give it at least a year, right? And that's what's important for our partnership. We've committed to the long term, the multiple years. Like we joke about, like we are officially married, right? Long term. And this is, we understand though that some others, it was a great idea. They saw the opportunity. It made sense, right? This is what every client has been asking for. And so they thought it will be fine. And I know a lot of them have had operational challenges, right? Which I said, like, we haven't, but I think that they're giving it a try. And, I respect that, but I do believe we'll have a much smaller universe of competitors by this time next year.
Yeah. I also want to ask you about where you see this ETF fitting into an investment strategy for just a moment, because Bitcoin has been called by some as digital gold or a hedge against inflation, but we've also seen Bitcoin maybe sort of waver or struggle during this recent period of economic uncertainty. So from your perspective, where does this ETF fit into a diversified investment strategy, as a safe haven or something with more risk?
Well, I love that question because, as you know, my background is commodities, right? 30 years of commodities. And we've been telling this story for commodities, saying like there should be a 5% allocation to most people's portfolio. And a lot of investors did put their 5% in. And we've done the math with Galaxy, and the math works out to 1% from equities actually gives the best risk adjusted return. And when we did this analysis, we only went back 5 years because I think it's sort of a cheating when people go back to the start of this, right? And like, oh, thousands of percent returns, right? That this is a different time, right? So the last 5 years, I think, is a good sort of time frame to analyze in terms of trying to decide what should this allocation be. Now, we know that it's going to be challenging for people to do the 1%, but even just that theme of getting off zero is key. And so I like to think that Bitcoin is inevitable, right? It is something that whether you want to invest or not, you need to learn about. And I think that's why it's great to have programs like this, where people can try to understand, like, what is the value of Bitcoin, right? It is a macro asset. And that Mike Novogratz always leads with that, is a macro asset. And so it's affected by inflation, by the Fed moves, by, how is the economy doing, right? And even geopolitics. So I think that for those who want a diversification element, again, like commodities, we think it deserves that 1% allocation, but we know that it will take time. And that's why we feel like we're not in this big rush to get money in immediately. We know that our advisors and our clients need time to learn.
So looking ahead, Invesco and Galaxy have a proposal in front of the SEC to launch SPOT Ether exchange traded funds. And back in December, the agency actually delayed that decision and they decided to push it to February. I'm not going to ask you to comment on that specific proposal itself, but I do wonder if you believe that the approval of these spot Bitcoin ETFs will make it easier for other crypto exchange traded products to be approved here in the US.
Yeah, look, as a first step, the reason we partnered with Invesco was because this was not about one product, and it wasn't about two products, and it wasn't only about single asset products. It was about the technology being embraced in a much broader suite. So we think over time, to Kathy's point, we're going to have a great suite of crypto products. We are excited about Ethereum. I think the market's already showing you that it's turning its eye to Ethereum a bit. There's been a rotation trade that's happened over the last week and a half. And then most importantly, I think you have a real roadmap. How do you become an institutional asset? You move from CME futures, OSC traded ETFs, futures ETFs in the US, and then the spot ETF. So obviously we can't comment on the SEC's approach to any filings or any one asset, but I do think, of all these assets, Bitcoin and Ethereum have established themselves. They have real use cases, they have real market caps, and they have real narratives, and they have real purposes in a portfolio. And so from that perspective, I would be surprised if we didn't have an Ethereum ETF, and we're going to be there and ready to go when it's time to do that.
All right, that's all for Crypto World this week. We'll be back again on Monday, and we'll see you then.